Well, when we put these positions on, the only thing that we're interested in is having these options expire within this profit range. We have a fairly large range that our prices can move in, and that's what I mean by the fact that prices will fluctuate. Well, prices can fluctuate up and they can fluctuate down. It does not matter for our position. All we have to do is be patient, wait, and collect our money at the end of the month when these options expire or just prior to when the options expire. Let's take a look at the cursor. Now, if you can see down in the left-hand corner, you can see that even at this point, if prices were to move down significantly, we would still have a profit of $1,234 on this position at expiration if prices move down. Now, we have a margin of $1,600. What kind of a return on investment is that? That's close to an 80% return on, maybe even more. If prices moved up, we might even make even more money. We have a maximum profit potential of $1,300 on this position. If you look down here in the left-hand corner, we're looking at the date of expiration, which is May 17th, not the current date, which is 4/29. We're looking at May 17th, which is the option expiration date. We have a profit potential here of $1,327.27 at expiration. That is close to a 95% return. Now, you might be thinking, well, gee, Dave, that's great. $1,600 and you're making, $1,600 a margin, you're making $1,300 or whatever. Even if this landed someplace in the middle, you're talking not less than $1,000, anywhere from like $1,100 up to $1,300 right in the middle. So even if it went up or even if it went down, if it went way down here, well, now your profit margins are a little bit lower, but I can show you exactly what to do when you need to adjust those, so that your profit potential is actually a fairly wide range here in prices, so that the market, so you're really taking advantage of the market's fluctuations. It doesn't matter if the market goes up, it doesn't matter if the market goes down, because you make money either way, and all you have to do is put these positions on 3 to 4 weeks before they expire and just sit back and just let them run and cash in a few days before expiration. Let me show you. Let me tell you exactly what the actual potential of this is. $1,600 margin, not much. Maximum profit, maybe around $1,300. If you were to put, let's say, double that, okay, now you're putting up $3,200 a margin. Now your maximum profit potential is anywhere from $2,400 to $2,600 for only $3,200 a margin. Let's say you did 10 times that. I put $16,000 worth of margin up. What's my profit potential now? My profit potential is $12,030 in this position at that one end, and $13,375 at this end. And if it's stuck right in the middle, it's $10,335 in 3 weeks to 4 weeks. And those are not, even that's not a very large position. That's only 10 times the margin. So if you had $16,000 in margin, your potential profit at expiration is close to $11,000, $12,000 in 3 weeks. There's lots of money to be made in this kind of trading. This is the kind of trading that professionals do. They don't care if market goes up, they don't care if the market goes down. Either way, they make money. They are looking for, they pay attention and respect the two biggest truths of the market. That is that prices fluctuate, options expire, and that is exactly what we take advantage of in these kind of trades. So, I mean, with $1,600 a margin, and you can make about $1,000 a month on this, you tell me, is that a good return on your investment? I think so. I mean, you're not going to get this kind of a return on your investment under any circumstances, under any other financial institution, only doing it on your own. This is the kind of system that I do. All I do is look at it once a day. I put on my trades 30 to 40 days, 3 weeks to 4 weeks before expiration of the options. All I do is sit back, monitor them on a daily basis, and then collect the money at the end of the expiration period. That's all I do. And you know what? If you've got, if you only have a couple $1,000, hey, you can still make, even if you only had a couple $1,000s of margin, look at the profits, $1,200 to $1,300 at the very worst, maybe $1,000, and the market can move up or down. It doesn't matter. $1,000 a month, only going to cost you $1,600. You get that $1,600 back in margin, plus you make the $1,000. So I don't see a situation in which you're not going to get a huge return on your investment. Now, does this always work? I'm going to say, hey, many strange things can happen in the market. There's no doubt about it. Prices can fluctuate wildly, and in those cases, then you're not going to be able to say, well, hey, maybe we're not going to have a profit. However, I'm not going to guarantee that you're always going to have a profit, but what I am going to guarantee is that I'm going to show you everything that you need in order to create an environment where it doesn't matter. Even at one point, the market ran way against me, and I had one position that was almost in a losing position, and guess what? Most traders would probably just close out that position. I turned it into a profit. There's lots of situations, if you know what you're doing, you can turn a losing situation into a profitable situation. And this is where the majority of traders in options just go wrong, because they do these one-dimensional trades. They put on either a spread, they just let it go, they don't know how to adjust, they don't know how to manage their position by the numbers, and they're not treating their investments as a business. Every business has maybe a month out of the year. The other 11 months, yeah, maybe they'll be profitable. If they're running their business the right way, you're going to make a profit at the end of the year. And if you listen to the videos and I show you exactly how I do my trades and exactly how you can do your trades too, then you're going to have the knowledge to trade with confidence. And that's what this is all about, because it doesn't matter if the market goes up or down. Even if it runs against your position, you're going to have the knowledge of what you need to do in order to turn that position around and make it profitable. So, hey, I wish you the best always. This is the real deal. This is how professional traders actually trade positions in large quantities. This is how market makers who know what they're doing and floor traders who know what they're doing, this is how they run their investment business. This is in fact, probably one of the most secret and really hidden systems. I mean, you might know how to trade calls and puts, but putting them together into an investment portfolio, into a business situation where you're only managing it by the numbers, is extremely rare. This is not something that is common knowledge. I've seen seminars for $20,000 that don't teach what I'm going to teach you in this class. Okay. Now what I've done is I put together about 20 different videos that goes through what I just described here, all the Greeks, which is the delta, gamma, theta, vega. I've given you introductory videos on the introduction to the profit scenario, what you really need to learn and how to understand the positions that we're creating. I've also gone into extensive trade selection and strategy. Trade selection and strategy is absolutely critical because we don't put these kind of positions on without a plan. This is a business, remember. We have a plan, and we put these positions on with a plan. So I go into trade selection and strategy. I also go into portfolio building. How do we build our portfolio? Because you can put on just one or two of these trades, like in the diamonds, EEM, the IWM, or the SPYs, but it's really about putting on different positions and different prices on different indexes and building a portfolio. And this is where the power of this system comes in, because you get to manage the portfolio rather than individual positions. One position might go against you, the other three positions are looking good, so you can kind of manage that one that was going against you, and it doesn't affect the other three. So even with $1,600 in margin here, we still have 4 positions. I mean, we still have 4 positions, so we're not trading large contracts. That's another thing too, is when you get started, you're trading, just a few contracts, but the return on investment is absolutely huge here.